Target stock is absolutely popping off, baby. Let's go. This thing's up 12.5% today, up to 124.81 per share. It just went up again. Let's go. This baby is rocking right now. So, why? Obviously, well, they reported some quarterly earnings, and needless to say, they were ridiculously good. These are some very good earnings. Beat on a non-GAAP EPS standpoint by 17 cents. They made $1.36 per share. On a GAAP standpoint, $1.37 per share, beat by 18 cents off of what was estimated for them. Revenue of 18.67 below, and that's an increase of 4.8% year over year, and a beat by 220 million. That's a nice significant beat right there. That's pretty satisfying. Obviously, that alone really isn't enough to send this stock absolutely catapulting for the most part. Valuation was already slightly high, so this I don't think is the entire reason. So we got to dig deeper and see what exactly is going on. Let's see. That's right. Lifted full year guidance. Now that one, that's the triple beat. So obviously you have the two things you got to beat on here, your EPS and your revenue. The triple beat is going to be on guidance because that is another big factor. So you could beat your earnings but lower your guidance for the next quarter or full year, and you're going to get hammered for it. Guidance is a huge part of earnings, and a lifted guidance is fantastic. Comp sales were up 4.5% in Q3 versus 3.5% consensus. That's significant. Off of a 3.1% increase in traffic. I just went to Target the other day, literally yesterday, and bought some stuff. So get that. Digital sales was 31%. Again, as I mentioned previously, this is what we're, for the most part, focusing on right now. You're going to see that 30+% increase in terms of digital pretty well every quarter, both in from Target and Walmart, and it's what really people have come to expect from them. So I think they'll certainly keep that up. Accounted for 7.5% of all sales, and that number should just continue to increase as we progress through the years. So gross margin improved to 29.8% of sales. Operating margin was 5.4% of sales versus 4.6% of yield. That's right, increased. Looking forward, this is where that stock bump is coming from. This is why this thing's launching. That's right, anticipates a full year, full fiscal year 20. EPS of $6.25 per share to $6.45 per share, which is against a consensus of $6.17 and a prior year of $5.90 to $6.20. That is a significant increase in terms of that in over a year, just a year in terms of that profit. So they're growing their business 5%, but they're still growing their profit at the same time, which is always exciting. This Target, and I've told you before, it's a good company. It's a very well-run company, and they know what they're doing, and they know what they want. Let's look at some of the numbers because it's time. It's time to look at the numbers, baby. Just as an aside, if you look pretty well, the main earnings winners right now, so far as retail are concerned, are Walmart and Target. The two big boys. It's not a shocker that these two are the success, the most successful ones so far. We've seen Home Depot have a pretty weak quarter. Kohl's had a pretty weak quarter as well. But meanwhile, Target and Walmart, hey, here we go, baby. On top of 5.1% last year, that's right, baby, in terms of comp sales. Comp sales have risen nearly 10% over the last 2 years. Let's see. Same-day fulfillment services accounted for 80% of Target's digital sales growth. That includes order pickup, so you order and then they deliver it out to your car once you arrive at store. Drive Up, similar thing. Shipped, which is their third-party company that is delivering same-day deliveries to you. That's really just huge for them. Traffic grew 3.1%, increase both stores and digital. That's right. Operating income grew 22.3% compared with last year. That's significant, and we'll look at those numbers because you know I care about profit quite a darn bit. GAAP EPS up 18%, and adjusted EPS was 24% higher than last year. That's some fantastic numbers. That's all I can tell you. I mean, this is just an all-around beat. All-around beat. That's fantastic. Let's look at this fourth quarter guidance. For the fourth quarter, Target expects comp sales growth of 3 to 4%. So again, around the 3.5 range, like they estimated previously. GAAP EPS from continuing operations $1.55 to $1.75, and again, this is the big quarter of the year for them. I mean, this is holiday time. This is where they should shine. Their fiscal year will end somewhere in February. This is a very important time for Target. They got to go ahead and prove it this quarter. Fourth quarter is huge for these retailers because it's got all the holidays in them, and that's really where you're going to see whether that's successful or not. So that's definitely a thing to look at. Operating results: total revenue of $18.7 billion, increased 4.7% from $17.8 billion last year. Sales growth combined with an 8.8% increase in other revenue. That's very nice, very, very nice. Operating income was $1 billion. $1 billion, up 22.3% from 819. So you tell me this company right here taking home $1 billion? Excuse me? Operating margin rate was 5.4%, compared with 4.6% in 2018. Got to love it. The gross margin rate 29.8%, compared with 28.7% last year. It's just wonderful stuff. It's just lovely stuff. That's all I could tell you. I love everything that's going on here. Shareholder returns is important. The company returned $631 million in shareholders to shareholders in the third quarter. That's right, they did. Dividends of $337 million. You know that's why I got this baby, for them dividends. Compared with $337 million in third quarter last year. That's right, reflecting a 30.1% increase in dividend per share, offset by a decline in share count. Okay. Share repurchase totaled $294 billion. They retired 3 million shares of common stock at an average price of $99.22, which is lovely. The less stock out there, it is the better for us. If this company's buying back stock, it's a good sign, and I love it. I love it, and I personally would love some more of it. So let's look. Obviously, here's the sales numbers again, that 4.7% change. You can see these numbers. If we're looking at a 9 months end, so end of the third quarter last year, there's a 4.4% increase at this time, 4.5% in terms of total revenue. So operating income up pretty significantly. That's a $1 billion, and up 15% versus last year if we're looking at a 9 months ending, which is absolutely fantastic. I love that. I don't know about you. Assets, they have cash and cash equivalents of a little bit less than $1 billion right now, which last year they had $825 million, a little bit less than they had in the first quarter. Again, that is something noteworthy you can consider, because you know me and my cash. Total assets worth of $13.8 billion, which is a little bit lesser in terms of they have a little bit less inventory than they did back of last year this time, which isn't necessarily an awful thing. Sometimes inventory can be a liability, especially in a retail market, in which if you have too much inventory and you don't have the ability to sell that within a correct period of time, you're usually going to be facing markdowns, and that'll really impact your margin. So I don't think there's necessarily anything too absurd going on there. So, accounts payable of 11 below. So that's one thing. I mean, I'm not a huge fan of. We're looking at total assets and total liabilities. Um, you know, I don't like this accounts payable number that much for Target here. Total current liability of 16 billion. I don't really like that number, but again, they're a company that's making this cashish, and I'm okay with it. They're gonna make that up, and there's no doubt about it. Um, Very well run company, and I just like it a lot. That's really all I have to say about Target here. Just look at this baby. Still up 12.5% after finishing this. Let's go.